that and tell me what you were expecting.
Yeah, thanks, Tolu. I think it was actually expected, when, I mean, different people had different positions. There were arguments for holding the rate steady. There were arguments for supporting a rate cut. But one thing was clear, between the two sides of the divide was that there cannot be and would not be an abrupt reduction of the monetary policy rate. And why is that so? Because, clearly the ship has to continue to be steadied to ensure that we do not roll back some of the benefits we've already enjoyed in terms of curbing inflation. Arguments for holding the rate steady, was essentially things that you would expect. So the advocacy for a cautious approach, because you want to ensure that you manage the stability of inflation, the reduction in inflation, which you can only do through proper tight liquidity management. The other argument for it was the elevated fiscal deficits, which could potentially be impacted by election spending, considering that this is the penultimate year before the 2027 election. So there would obviously be pressure on that side. For example, looking at the budget of the INEC, which is, upwards of 870 something billion naira. And that's just the budget of INEC. You would also see that the various political parties would also be actively involved in spending, obviously in terms of logistics and also campaigns. But also even at these, subnational level, especially, where the governors would have to show the legacy they've left, for the people to ensure that, there's a good headspace leading up to the election when people think about the performance of their government. So it wasn't unexpected, but I think the justification to then say, well, some rate cut has to come in is the fact that inflation has slowed down. So, when you see the decline in December and even up to late 2025 and early this year at 15.1, and then I think it has dropped below 15 now, that moderation, as well as the intention to stimulate more economic growth. Remember that one of the things which has been a challenge for businesses in the past couple of years has been the access to credit and funding to drive expansion and growth of business. And that has, especially in the manufacturing sector, that has been a significant challenge. And it's, if you really want to ensure that the GDP grows sustainably in the way we would like it, then you need to also have, some rate cuts. On balance, what we expect, especially for an economy like Nigeria, is that the GDP grows faster than the growth of the population. That because that is when you would begin to see the benefit of some of the reforms that have come through. So there's that balance of the monetary and the fiscal side, as well as the holistic management of the economy. So this is why it is a moderate one of just 50 basis points.
Well, for me, I would just say I'm a bit excited. At least there's a shift, so that we know that at least we are moving towards that direction, moving forward. But let's look at some of the key developments there, as alluded to by the central bank governor. Let's look at some global economic issues. He talked about stability in the global space, saying that this also sends a good signal back to Nigeria's economy. He talks about investment drive, how he's trying to converse more for more investment into coming into Nigeria. Let me allow you react to some of these issues, particularly the global development and how it concerns us as a country.
All right, brilliant question, Tolu. And really, it is very simple that, your high interest rates can attract especially foreign portfolio investment who are seeking higher yields, which would then support the capital inflows into the Nigerian financial market. That inflow would help us bolster our foreign exchange reserve and support the Naira stability. And these are some of the things that the central bank has to pay attention to in order to reduce and manage the volatility in the exchange rate market. From a global perspective, there's always been that pressure, from the US perspective of potentially, with the change of the Federal Reserve Chair, that, the Trump administration could put pressure. And even though there is obviously autonomy of the Federal Reserve, that it could give rise to a potential rate cut, on the US side. Now, if that happens, it would actually benefit Nigeria as well in terms of attracting investment, because then you will be able to see more benefits translating with more capital. Tariffs that were introduced by the Trump administration, and that brings a lot of certainty across the global markets. On the one hand, because this is certainly the final position of the matter. Of course, not final, because there's been a response from that side as well, with the introduction of a flat, tariff across board.
Yeah.
But overall, there is a bit more certainty because there's clarity around the level of tariffs and the headroom that the executive in the US, can play around with. So that's going to drive a lot of more trade, and obviously it will have a ripple effect in terms of demand for crude, which could potentially be to our benefit as well. So like we always say, we're never insulated from geopolitics. Yeah. And the global dynamics. But it's always better to have your house in order, because those other things you really can't control. What you can control, for example, driving domestic production, ensuring that you're driving more exports, mobilizing capital and allowing the private sector to thrive. Those are the things that are within our control. And government needs to do a bit more in terms of, some of these things, as well as infrastructure, which will then drive the dividends of growth that we're looking for.
Now, this is the second time in let me say 2 weeks, that the central bank governor will come out hard to talk about election spending. He has talked about he mentioned it at the NERC meeting where the governors were all on seats, and he told them, if you do this, it might affect the little gains we've been able to put together following the reforms. Now he's saying that again at the end of the first MPC meeting for 2026. But my question to you will really be, how concerned are you about this spending? What does it mean if really if it happens to be overspending, or we happen to witness overspending during that election season? What impact would it practically have on our economy and some of these gains?
Yes, Tolu, you need to do very complex economic simulation to actually look at the balance of, because spending in itself is not really bad, because then you're driving economic activity. So it's always good to spend. and I think your comment alluded to it. It is the overspending, the spending, where something gets too much,
Yeah,
that
yeah,
it then tilts the balance.
yeah.
And I'm sure nobody has that figure to now tell you clearly and say this is when it crosses the line
Mm.
and becomes overspending. But when you listen to the CBN governor, I think what he was highlighting was the risk, and giving you the reason why they haven't dropped the rates, for example, by 100 basis points or 150 basis points. Because to his words, every activity and every economy faces risk. In fact, this is, economics 101, because even if you set up a business today, the environment which it operates poses risks. And he's just highlighting the fact that that is an important risk, and one of the reasons why, he being the chairman of the MPC, they've gone in this direction. Now that risk, I do not think, with the way the interest rates have been held, I suspect that risk will, be sufficiently under control. So I mentioned the various factors that could drive that spending, across campaigning and all those things. The big challenge as well is that many of that spending, apart from the ones where at the subnational level and the federal level is spent on infrastructure, do not give rise to benefits much after. Just think about a campaign umbrella and things like that. Those things will not drive economic activity. They are not like port expansion or building a bridge, that connects, two people to, two locations together, or even building rail tracks and setting up, rail terminals, so, and therein lies the dilemma, because many times the things that are spent during election do not give that long-term, did not give that long-term value, because they are things that are done just to drive the electorate to think in a particular manner. And what better than their current needs instead of thinking about long-term? So that is the danger, or the risk that is posed by election spending. But like I said, in my view, I do not think that the way the interest rates have been held, that risk will not be under control. I certainly believe that it should be under control by the time we get into 2027.
Now, let me take you now to some arguments or some sentiments at some quarters saying that inflation dropping or reduction in inflation or moderating inflation, anyhow we like to understand it, may not immediately warrant this kind of cut that we've seen. Some expected that maybe it would have been the next meeting before we see that cut.
Now, so that argument is built on significant prudence, where people, but because it's just 50 basis points, right? In the private sector where I operate, it really doesn't change much in terms of outcome, right? 50 basis points, you're looking at, borrowing, 100 million. It's not gonna be the thing tilting your direction of whether I borrow or I do not borrow, right? And I know that the CBN would have looked at data before cutting it, at this level, but like I said, the argument for maintaining things, and it's just because of the outcome. When you look at what has happened, over the past 1 year around the inflation, how core inflation, per particularly the food inflation, has dropped significantly. But people must realize that the factors that drive that are not always things that are, that are quantitative, but rather soft and a bit qualitative. For example, when you talk about, production and harvest, that's driven by the cycle of rainfall, and things like that. The things that government can control on the other side will be, security, right? The supply chain and the distribution network, and ensuring that there is safety, of the produce getting through to the consumption point. So overall, I think that the rate cut is in the right direction. And the CBN governor mentioned something very, very important, and that is the perception, the consumer perception, the investors' perception, and so on. Those are the things that drives, the outcomes that the CBN is looking for. Now, this rate cut is a signal, telling you that, if we're able to maintain things at the level, we'll see further decline and cuts in the rate, but at the same time, and that question was posed around the reserves, the growth of the reserves. It has been fantastic. I think he mentioned in the last 10 years. But the real issue is what exactly is the net reserve, and based on the words of the CBN governor, at some point that would also be exposed. When you see the performance and how this has been growing over time, it gives you more confidence, especially the foreign investors who had, and you saw a lot of exits of businesses in 2023, 2024, because of lack of liquidity in the foreign exchange market. Now, when you see this happening, the rate cut, you see that the Naira debit cards are now, being able to be used abroad. And you see that, the premium between the parallel and the official market is within the threshold that is expected. And even the appreciation of the currency, then there's more confidence. And people are very optimistic about 2026 and looking forward into the future as well.
Mr. Kenneth Erikume, I must thank you so much for your time. Brilliant analysis as always. Partner tax reporting and strategy. PricewaterhouseCoopers. Do have a great day.
Thank you, Tolu. Cheers.